Hey everyone, welcome back to my channel. Dave Gendros here. This channel's focus is on ways to generate wealth, streams of income online, and I show you what I'm doing and share information with you, and you could decide what's good for you and what's not good for you. I did a video just a few minutes ago. My computer crashed, so I didn't complete the video, so I'm going to follow up and complete that video now. Before we get started though, just be sure to check the video description for timestamps so you could jump ahead or jump back and forth on topics of interest for you in case you can't watch the whole thing. In addition, there's ways to contact me in the video description. There's other opportunities listed there with links. And more importantly, there's an income disclaimer there saying, basically explaining to you that I am not a financial advisor. Everything I'm doing here is for training purposes for you to build your skill set of technical analysis. Anything I talk about in terms of targets and all that is all virtual. It's all basically just us putting stuff on the chart and seeing if it plays out like we think it is. Practice, 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 and you'll become skilled at technical analysis, and it'll really improve your trading capabilities. And with that, you could generate wealth very easily. It's not as hard as you think, but it does take time and effort, so please consider doing that. In addition, when I get to 2,000 members, I'm going to be giving away a crypto gift for you guys for building the channel, so please consider subscribing, liking, and sharing this video to get the subscriber base increased. And again, I'm looking for people that want to be part of the channel, not just coming here for the free gift. So please don't subscribe unless you really want to follow me and hear what I have to say and share with you, and we can create a community here. So please put some feedback in comments and let me know what you want me to talk about, what the next crypto you want me to look at, stuff like that. So please take some time and make a comment. All right, let's get back into the video. Okay, so we were talking about VeChain, and we pretty much finished it. The only thing I didn't take in here is the pattern targets. So let's just draw that real quick. I had started drawing it in the other video. So there was one there, and then we were copying this up to here to take the pattern target here. And then, of course, you could do this one. It's pretty close to this one right here. Then I forgot what the other one was. So we're going to leave it at that. There's a couple of them right there. The pivot A is the high, and then of course the algorithm target of -236, and then of course the pattern target up here of pretty much 12 cents, somewhere around 12 cents. Now there was one more in the middle, but for the life of me I don't remember what I was doing to get there. So we'll have to just leave these couple here that I have. Just make sure you do proper risk management. Wait for the breakout, wait for the volume, set your stop losses, and take some off the table as it's going up. If it's a long-term hold, that's a different story. But if this is a trade that you're looking to take when the breakout happens, you got to be smart about your money and take stuff off the table, take a win, and get ready for the next trade. All right, so with that being said, let's move on to the next. All right, so let's take a step back here. So it's still within this pitchfork. It's still within this big channel here, and it looks like it might have broken down here, but not really because the volume did not increase substantially. So again, this D was just an estimated point. It never happened. See how it just continued down? So what we got to do is we got to see if it makes sense to modify this. Maybe for now it's something more along these lines. In fact, it might even be like something more like that. This is the current situation for Voyager. Again, what I was talking about was the DXY influence. So as the dollar, if it becomes weaker, that's going to increase the potential for these to break to the upside. Now, again, just like the other one, let me just get rid of this because this was based on that triangle that didn't play out. So this is really where we are here with this. It's a triangle pattern. It's a descending triangle pattern, which tends to be more bearish than bullish. So you gotta be careful. It might break down and not up. And we can again put some targets on the chart by just going from A to B, from the low to the pivot high. And just kind of estimate where this breakout might happen. So you got to wait for the breakout. Don't do anything until the breakout actually happens, and you got to move these targets down this trend line depending on where the breakout actually happens. And you got to look for volume. You got to look for a big volume like this to confirm the breakout. You see how it moved up? This volume right here is confirmation that there's a breakout happening. So if there's no volume and it's low like this, then it's just kind of, you got to reset the pattern and see what's happening here. So you got to continually do this. This is just an ongoing process that you do in terms of technical analysis. Come in here and check it out and see what's going on. So these are the patterns, targets. Just like we did before, one of the the major hurdles will be the B level from here, and then you got the pattern target up here. So that's on the upside. Downside, we probably got this right here, this pivot right here. Let's zoom in here and see what this really is. These labels kind of sometimes hurt to visualize where these peaks are. But somewhere around there is going to be some hesitation because it is pivot. If you want to get closer in there, you could do that. And then we got the pattern target, which kind of falls back into here. Oop, let me put that there. Let me copy this down here. Let me make these red. Oh, I didn't want to do that. All right. Okay. All right. So that's really where that is. Again, you're waiting for the breakout, so you're going to wait for it to break here. I didn't get to show this on the other chart, but again, you've seen this a couple times if you're following my channel. But if this is the first time seeing it, what you want to do is you want to see it break out below this line, come back, check it, and then verify that it's going to come down and pull away. And as these happen here, you're going to see it check. And if it doesn't, if it maintains it, then it's going to go back up, but you're hoping that it's going to go down. And as each one of these happen, you're going to set your stop loss there. When this one breaks through here, then you're going to set your stop loss right above there. And then same thing here. So you consider taking money off the table, along the way. Don't wait for the final target to be hit. Take some money off as each one of these, as it's pushing lower, and then leave the rest. Make sure you bring it to break even for sure, so you can't lose the trade. And then as it's pushing down further, continue moving the stop loss down lower to lock in some profits. Same thing with the upside. You want to wait for the breakout, the check, and then the move up. And then if it breaks through here, then it's going to come back probably and check, and then move up. Check, and then move up. Along the way, like I said, first one, you're probably going to put it below this. The first stop loss will be below the trend line. Then when it pushes higher, you're going to move it to break even. And when it pushes through this level, then you're going to move it over to here. Same thing here. You're going to move it right underneath the check. Wherever it comes back and checks and pivots, That's right below that level is where you should move your stop loss. All right, so again, you're kind of waiting for this pattern to play out. If this breaks out, you got this target over here, and then if this breaks out here, you got the larger target all the way up here, right? So you got kind of two patterns in play here, and one's going to lead to the next. So when it breaks out here, when it breaks out of this triangle, this pattern target makes it break out of this channel. And when it breaks out of this channel, this is the target for that channel. So you got intermediate steps here, and then when that's hit, ideally it's going to continue going higher, and then it's going to test this upper pivot from the previous high, and then do the same thing and go up to this target. So again, take some off the table, leave some if you wish. Make sure you get it to break even and positive, and then let it see where it goes. If it breaks through here, then you got stop loss there, and then finally here's the final target for the larger pattern, this pattern here. All right, so that's it for Voyager. Again, I believe a lot of this is going to be a positive in the coming days and weeks because the dollar has rallied a lot, and it looks like it's actually right now, if you look at it, it's taking a little bit of a break. So it might start heading downward, which will be pushing prices that are, all the cryptos that are tied to the dollar as a ratio are going to push higher when the dollar becomes weaker again. So I don't know what I'm trying to get this off the screen to one of my other screens, but it popped back on. All right. So again, you got to watch the dollar index. Everyone's really focused on these charts, but sometimes you got to take a step back and look at the DXY, see what it's doing, and that'll help guide you in what direction you might see here. Again, the cryptos that are on the second set of your pair, if it says USD, it's inversely proportional to the USD, which means when this USD value goes higher, this is going to go lower. When USD goes lower, it's going to make the ratio higher. So that's how you kind of think about how the price will move related to the dollar. It's inversely proportional. So that means DXY goes down, crypto price will go up. DXY goes up, crypto price will go down. All right, so next chart. So again, just wait for the breakout before you do anything. AAVE, look at AAVE. It looks like it's just breaking out possibly right now, but there's not a lot of volume. Again, I'm doing my brush thing. All right. Let's take a, it's already at the daily. All right, so you remember I kind of mentioned that there's going to be a crossroad that's happening right here. It looks like it might have broken out and it's going to tend higher. So what we want to do here is add that point 1.25. And in fact, yeah, you don't really need that one yet. So you kind of saw a little bit of a fake out, but the thing is, we never really adjusted this. We didn't really have too many points of reference. So now you would want to go and tweak this to touch the two lower points as much as possible. So these right here, and then now this is the new pitchfork, and I believe, we can get rid of the downward one. I don't think that's going to play out. So let's clean that up. Let's get rid of this Fibonacci. Let's get rid of this real quick just to clean up a little bit. So it's approaching a breakout here. I mean, these are 2 points there, 2 points there. So this is a solid triangle. We just got to see this volume pick up. Right now it looks like it's going to tend to break out of this triangle. Maybe, this is on the daily, so you still got a day that it still could come back in. But if you come back to the lower time frames, you could kind of see how it's starting to build the base here. Building a base, and it's probably going to push higher. But we have to see some momentum. We don't see a lot of momentum here right now. See the volume so low. Like something like this would kind of confirm a breakout. But you want to, just like all the other ones that I keep mentioning, you want to wait for it to come back, check, and then go. So don't do a trade until it comes back and validates that this is now a support. Right now it's a resistance. It's trying to fight its way out of it, and then it's going to come back and it's going to check it, and then it's going to become a support line, and then it's going to be starting to push away. Once it starts pushing away is when you should consider taking a trade if you were getting into a trade with this. And then you would put your stop loss right below the trend line. And then once it starts pulling away further, you want to bring that stop loss up to break even, so you can't lose the trade no matter what happens, and just kind of follow the path up. I draw this as a straight line, but really what's going to happen, it's going to probably do stuff like this. It's not going to go straight up in a straight line. So every time it does a pivot and it moves back higher, you want to move that stop loss higher and higher along with it. So that's just the technique I use. I don't want to call it standard practice, but that's, you know, what everyone really does is they just continue trailing the price action with the stop loss right below the pivot line, the retracements. You know, every time it goes up, it's going to retrace a little bit, go up, retrace, go up, retrace. You know, everything doesn't go up in a straight line. And in fact, we might even see a bigger retrace. I mean, you don't know. You don't know how it's really going to go, but every time you see that come back and then it starts pulling away again, that tells you to move that stop loss up a little higher. All right. So again, we're just in the middle of a possible breakout here. You got the targets here. You got this target, which is the B pivot, and then of course you got the target from the actual pattern target. So those are the two, you know, certainly consider taking some. I mean, depending on how low this goes, you might even want to consider taking some at these lower pivots, because these are the pivots, you know, D and B have to be broken before it can hit the pattern. So, you know, you're going to see some resistance here at these pivots. So consider taking some stuff off the table along the way, maybe 25%, leave the rest up here. Move up your stop losses along the way, and you have a profitable trade. So that's it. The goal here is to protect your equity. Yeah, you may come back and stop out and not make anything, but not losing something you can consider making, right? Every time you guarantee yourself not losing any money, you could consider the fact that you could have lost money. So in the end, you saved yourself some losses, which, you know, you want to see your account grow, but worst case scenario, you don't want to see your account go lower. You'd rather your account stay the same and live to fight another day. So play risk management correctly. Don't get too greedy. Take your wins. Step away. Wait for the next trade. You know, we're talking about trades almost every day here. So there's always going to be another trade to get in. And just don't let greed and chasing things get you in trouble. All right. So that was AAVE. And finally, the graft. So the graft looks like it might have hit its target here. This was a inverse head and shoulders, and if you take the measurement from the neckline down to the head, and then you place this at the breakout, you can see our target was hit. So if you took the breakout trade and you followed it, you know, you followed and you can see how it hit the resistance here. So hopefully you took some profits prior to that at the pattern target. And then of course, as it's hitting this resistance level, you should be considering taking another one. So trade is currently in play. If you're already in there, there's nothing else to really do. The only other trade you could wait for is the breakout of this trend line. So what we talked about earlier is still here. You know, you're going to wait for it to break out, come back and check and go up higher. So this is all still valid. There's really nothing else to really say about the graph right now, other than if you're in a head and shoulder trade, take something off the table up here if you're in it, you know, or at least move your stop loss. Like right now, based on this price action, you should be moving your stop loss somewhere over here underneath that pivot. So basically, this is the same formation that I keep telling you happens. Right? So this is the pivot. it went up, it retraced. This is your new stop loss. So from here, it's hard to see because we could zoom in here, but I hate that. Sorry, guys. What you can see is if you do this and you move your stop loss up here, let's get a little bit more specific so that you can really see the idea. So if you put your stop loss right up here now, right? So, you know, I've been using the drawing tool. So that would be your stop loss. So from your entry price would be, which would be down here to here, this is now guaranteed profit. So no matter what happens with this price, if it hits here and comes back down, whatever may happen, you got a guaranteed profit on your trade. Now if you drop down to a lower time frame, now we didn't get the exact come back and check thing over here on the breakout. Now if you drop down this low, you could really tweak this neckline to be a little bit tighter here. You know, this is the neckline. Touch there, touch there. So you could actually see even on a lower time frame for you taking this trade right here, you should have waited for it to come up, and then it came back down, it checked it, and then went up. Right here is where you should have entered the trade. Price action always comes back, so resistance, resistance, resistance. Now it becomes support. Boom, you get into the trade right here. Now, based on this price action, this is where you might have gotten stopped out, though, if you would have followed this progress up here and it would have pivoted here. You would have probably put your stop loss here. You probably would have put the stop loss over here, and when it came back down, you probably would have got stopped out. But from here to here, from here to here would have been your profit. So you probably would be out of the trade right now if you actually did follow the proper risk management. Your first stop loss would have been set here, and then when price action came up and approached the target, actually, I mean, you should have probably been out of the trade because it really came pretty close to the target of this pattern. Yeah, so it actually hit the pattern target. So realistically, you should have been out of the trade anyway because the pattern target was hit. So this on this trade, this would have been the target price for you to for the pattern. So you can kind of see the the repetitive thing I keep talking about. Use those stop losses. Right here, your stop loss would have been here or even possibly here. But reality is, once you got into your trade here, it blew up so high that you probably would have gotten out of your target price of the pattern prior to it even coming down and retracing. Now, if you would have wanted to let it run a little further, then you would have either had your stop loss here, or maybe you would have even had it here and you would have been stopped out anyway. So no matter what, if you used the proper risk management, you wouldn't be in the trade right now. Now let's look at volume. All right, so you could also see on the breakout of this neckline, you saw the increase in volume. So that was a confirmation that it was a good breakout. And then it came back down, checked, and then the impulse happened again, another push higher. So this was also very good as well. So this really was a nice textbook inverse head and shoulder trade that you might have gotten involved in. If not, see if you could put the stuff on the charts here and you can see what I'm saying, and practice moving these stop losses higher. Practice on scaling out of your trades, scaling into your trades. You should be dollar cost averaging somewhere down here in, and dollar cost averaging out. Right now, if you miss this whole trade, the next trade you're waiting for is this breakout. So if you go back up to the daily, right now you're waiting for this to come up, come back down. You're basically looking for it to do this. come up, come down. This is the entry once it pushes away. And then you should be moving your stop losses here. Once it goes up higher, move it to break even. And again, you start locking in. Start locking in these profits. You know, depending on whatever happens with price action, you guarantee yourself a profit once you move your stop loss higher than entry. You know, at break even, you're putting your stop loss at the entry price. Once you start moving it higher than entry, you guarantee guarantee yourself a winning trade. So you can't lose by winning. You know, just don't try to chase the home run, because you get slaughtered that way, and it's just not worth it. There's always going to be another trade waiting for you to take a look at. There's going to be another chart for you to put stuff on and set alerts and wait for the next trigger. You want to set the traps. You don't want to chase money. You don't want to chase greed. You don't want to, you want to be the smart money. You don't want to be the average retail investor that just blindly invests, and then when it goes down, they're selling. Meanwhile, we're buying when it goes down because it's a good opportunity to get in. So like when it priced, the retail investor bought up here and sold down here. And what we do, we wait for it to come down here, because now we know it did a nice retrace down to 618 or 65. Now, you know, if it's still in a bull market, tendencies are it's going to come higher. So we would be buying down here, not selling, but the average person will be selling because of fear, doubt, and possibly over leveraging their account. So do proper risk management. Don't go crazy with trying to make home runs. Again, steady as she goes. Over time, your account's going to grow a lot by just compounding effect and taking the 1 to 2% wins and just using that 1 to 2% next time for the next trade, and then just continuing to increase your equity in your account. So, all right. So with that being said, just consider subscribing to the channel. Click the little bell, like, share. And then again, when we get to 2,000 subscribers, I'm going to do a giveaway. So please consider subscribing. I look forward to seeing you guys in the comments. Put some feedback. Let me know what other coins you want me to take a look at. And I'll be putting out another video later this morning. And that's it. So take care, guys. Sorry about the video crash on the last video.